What's up everyone, welcome back to the Idiot Investor Guide channel with your host Guy Davidson. Today I'm going to go through and, as I promised, break down the difference in costs between Hatch and Stake. So I'll take you through a spreadsheet I've put together that calculates the fees, and then I will also talk about what I'm planning to do based on the results of this and some of the other things I've noticed throughout the past week or so of investing in both platforms. If you missed my last video, I gave a quick overview of Stake, and if you want to join up and see what Stake's all about, there's a referral link below. And if you do sign up using that referral link, you get a free stock. I get a free stock. And if you've missed the last video, I'm running a competition that if I get a Nike stock, which is worth around $90, then I will give you $50 to put into a trading platform of your choice. So sign up today. If I get Nike, great, you get $50. Otherwise, you get a free stock anyway, and you can't really lose. Before we get into this, I think it's important and glaringly obvious that I'm not a financial advisor. I'm just a fan of investing. I'm actually pretty bloody addicted to it now, to be honest. I'm stoked that a new platform came out because now I've got 3 platforms that I look at. It's like my new social media. I'm addicted to scrolling through the shares and looking at my portfolio. But point being, I'm not a financial advisor, so just take this with a grain of salt, and hopefully this spreadsheet can help guide your decision on where you want to invest, but ultimately that's your decision to make. Don't take my advice as financial advice. Without further ado, let's dive right in and have a look at what the differences are in fees between Hatch and Stake. First and foremost, I just want to give a big shout out to Money King NZ. They've put together a spreadsheet that I used in a previous video, which is a Sharesies versus Hatch EFT fee breakdown. If you haven't watched that, go and see that. Money King NZ also put together a Stake versus Hatch fee calculator. It was pretty high level, so I think it was just a quickly done thing that might be refined later. What I really wanted to look at was over time, which is going to be the better option. The calculator Money King NZ put together was really good if you're looking at a singular stock and how much it would cost to put the money in and buy the stock and the returns there. What I wanted to look at is across my whole portfolio over a certain amount of time, what would be the better platform to be using, because the overall key premise is that Stake has higher foreign exchange fees. So when you put money in and take money out, Stake has higher fees there. But Stake has no commission, no trading fees. So when you're actually moving your money around in the account and buying and selling shares, you don't pay anything. Whereas with Hatch, it's somewhere from $3 up per transaction. So that's what I really wanted to break down, is look at, they have different fee structures, but which one is best for me long term and the way that I invest. I'll make the spreadsheet available in the description below so you can have access to it. You'll just need to create a copy of it so that you can edit it yourself. It also comes with the Sharesies versus Hatch ETF calculator as well. I'll start to build this out as I continue to go along and new platforms come out. So for example, when Sharesies comes out with US stock, I'll make sure to do a breakdown versus Hatch and Stake with that as well. I'll quickly run you through the instructions first, which are down the bottom, and that basically tells you step by step how to use this sheet. You don't need to update every field. It will tell you exactly the ones you need to update, and then you can do this multiple times to run different scenarios. Say if you might invest more frequently or less frequently, or invest in more shares or less shares. So first of all, you just need to update the amount that you're going to be regularly investing at the top for both Stake and Hatch. If you want to do a like-for-like comparison, I recommend doing exactly the same amount on both. The next part is that you need to update the ticker here for whichever stock that you're going to be investing in. Now, you don't have to have them all filled in. If you're only investing in 1 or 2, that's fine. I've got 6, so I just wanted to make it as realistic as possible for what my investments are currently. And it's important that you do get the actual ticker symbol, because the stock price automatically changes based off the ticker. So don't write out the full name like Google or Apple or Alphabet. You want to write in the ticker, GOOGL or TSLA for Tesla. And I've put a link here where you can find all the tickers, but in most of the trading platforms, it'll tell you the ticker with the name of the stock anyway. Next, you want to enter the allocation percentage in this column. So that's basically saying of all the stocks that I invest in either platform, how much percentage of this regular contribution is going to go to each stock. And that will automatically calculate some of these other numbers. Then you need to say how many years you're planning to invest in. So your horizon of, am I going to be investing for 5, 10, 15, 20 years? And how many regular investments that you're going to do per year. So am I investing yearly, monthly, fortnightly, weekly, something like that. And that's it. It'll spit out the results. You can see that I've highlighted the cells red and green. The green basically means it's the better option, you get more money. So the two different things it's looking at is when you put money into the platform, how much do you get to play with? So as soon as you invest it, how much do you lose from the foreign exchange fee and actually have left over to invest in stocks in the platform? And the bottom row is looking at once you withdraw the money again, how much do you have left over? So do you have more money once you've sold everything and withdrawn the funds to be able to spend them yourself? It's important to note there are some limitations. It's not taking into consideration any gains that you would get off the stock. So it's literally looking at put the money into the platform, buy the shares, assuming that the shares stay the exact same value over time, and then selling the shares and withdrawing the money again. So that would change a little bit with the FX fees, because if you had more money to withdraw, the foreign exchange fee would be more significant. So there is a limitation there, but this is just looking at a real simple solution to say, is this going to be worth my while? And you'll be able to read between the lines and say, okay, if it's really even in terms of the money that you withdraw out at the end of the day, then I would say, over time, probably you would have had some gains, and so maybe it would be better to go one way or the other. You don't need that. Overcomplicating things. All right, enough talking. Let's run through a scenario, because I've just been blabbering on and I'm going to have to edit a whole bunch of stuff out. You can see right now I've got $500 that I'm going to be regularly investing into each platform, and I'm going to be investing across 6 different stocks. I'm going to invest for 1 year only, and I'm going to do one deposit. So $500 invested into 6 stocks and then withdrawn again at the end of the year. You can see off the bat, not surprisingly, I get less money through stake once I put it into the platform to invest in stocks, because it has a higher foreign exchange fee. But you can see when I withdraw the money at the end of the year, if I invested with stake, I actually have more money because of the brokerage fee, the transaction fee through Hatch, whereas stake doesn't have one. So if I'm going across many different stocks, that actually adds up to be $18 for 6 different investments. So let's go through and run some different scenarios. If I were to say that I'm going to be investing for, let's go with 20 years, you can see it automatically jumps around a little bit. And then I'll say maybe I'm going to be doing 24 investments each year. So investing fortnightly. This is pretty accurate as to how I invest currently. So if I'm going to be putting $500 into each platform per fortnight, so 24 in a year, and I'm going to be doing it for 20 years across 6 stocks. Again, not surprisingly, I get more money as soon as I put it in through Hatch because it has less foreign exchange fee. But then there's a huge difference between what money I get out at the end of 20 years as well. Because if you look at this cell here, you can see that through Hatch, I end up paying over $8,500 in fees when I'm trading stocks. So if I were to put money into each of these stocks once a fortnight, I end up paying $8,500 over 20 years, which is really significant. So let's run another example. Say I'm going to be investing $5,000 in each platform. I'm going to be investing for 20 years, but this time I'm only going to be investing twice a year. You can see now, actually, Hatch is the better option slightly, even when I'm across 6 different options still, 6 different stocks. And that's because I end up having a lot more money in, and I'm doing less transactions, less movements. So the foreign exchange fee, or the deposit and withdrawal fee, because it's double through stake that it is through Hatch, ends up being more significant than the brokerage fee because I'm only doing 2 transactions a year. So let's say that I'm only going to be investing across 2 different platforms, 2 different stocks now. So I'm only going to be investing in Tesla and Google. I'm going to be putting $5,000 in every 6 months over 20 years. You can see again, Hatch is the better option because now I'm doing even less transactions. So I'm paying less brokerage fee. And I've got $200,000 over that period that I've invested, which means there's going to be a higher foreign exchange fee when I put money in and withdraw money out. Now let's look at something in the middle. So maybe I'm going to be doing $1,000. $1,000, I'm going to do it maybe every second month over 20 years. And I'm only going to invest in 2 stocks. You can see that Hatch is slightly better option, only by $90, so it's not a lot. But then what happens if I say I'm going to be investing across my 6 different portfolios again? All of a sudden, it's significantly better through Stake, once again, than through Hatch. So you're probably starting to get the picture by now. The overarching theme here is if you're doing large amounts of money and infrequent trading, so you're not constantly buying and selling stocks, you're just putting a big chunk of money in every now and again, then Hatch is probably going to be your best option because you're paying less fees every time you put money in or withdraw it out, and you're not doing a lot of transactions, so the brokerage fee doesn't actually make that much of an impact. However, if you're going to be putting less money in, smaller amounts of money regularly, if you wanted to dollar cost average, for example, and do that every fortnight or every time you get paid, you're wanting to put some of that into stocks, then Stake's probably going to be a better option because you're doing regular investments, so the zero commission or zero trading fee is really impactful. And if you're doing smaller amounts of money, the fact that Stake has a 1% foreign exchange fee versus Hatch's 0.5% isn't actually super significant because you're not talking about hundreds and thousands of dollars, you're talking about $500, $100 at a time. I think you get the idea now of how to use this calculator, so I'm going to let you guys run your own scenarios through it. In terms of my own investment, I invest fortnightly. I looked at my Hatch transactions and I averaged about 6 transactions a month over the past couple of months. So when I run this scenario, that's the things I was looking at. I'm a reasonably frequent investor. I don't invest heaps of money at a time. So Stake is actually starting to look like the better option for my personal investment style. There's a few other things you got to think about outside of the fee structure, and I sort of covered some of those in my previous Stake video when I did a high-level overview. But some of the things I'm starting to see is Stake's app allows you to see more up-to-date losses and gains on stock price. So you don't have to necessarily wait for that 20-minute window every time that you do through Hatch and Sharesies. But Stake also takes longer to get your money into your account. And also if you buy and sell stocks, it's not straight away. It can take a while for the money to clear. So if you're wanting to move money around frequently and fast, then it doesn't necessarily happen in real time like Hatch and Sharesies can. I'm not going to tell you what to do. You need to make that decision for yourself, but hopefully this spreadsheet helps guide your decision and give you a bit more of an educated insight into which platform is going to be longer term the better option for you to be investing your money. So that's all I wanted to go through today. It's given you a good high-level overview of Stake and Hatch and the difference in fees. Hopefully that gives you a good indicator as to which way you want to go for investing in the US market from New Zealand. As we all know, Sharesies is coming out with a US portfolio option soon, so that'll be very interesting, and I'll do another breakdown of that. It should be in the coming month or two, so watch out for that. As I said before, click the link below and sign up to Stake so that you get a free stock and I also get a free stock. If I get Nike as my free stock, I'll give you $50 to invest into the platform of your choice. How I'm going to know it's you is leave in the comments below your Stake username, because I get an email saying who used my referral code. So if I win, I'll need to be able to make sure that that's you. So leave the comment below. The first and only person to do that so far is Farid Fania. So congratulations on doing that, man. Unfortunately, all I got was GoPro. But thanks for leaving the comment and following the instructions. That's what you've got to do if you want to be in the chance to win $50 if I get a Nike stock. Thanks for tuning in. like and subscribe if you want to keep following my journey in investment and getting more updates like this as new platforms come out that open us up to the US market. Coming up, I'll be having my Sharesies Portfolio 3 and Hatch Portfolio 3. And I'll also be doing my first video on how to invest $10 a week. So I'm going to be looking at basically passive investment with $10 a week so that anyone can get their foot into the investment game and start seeing those compounding interest gains over time. Till next time, guys, we'll catch you later.